Meme stocks really having another big year in 2024. Roaring Kitty, of course, came back, and that kind of spurred a revival in the meme stock trade.
When suddenly the masses become interested in the stock market, I think it's incredible. If we all jump in together, we can change the narrative on the company. The problem with that is you're not doing it based on fundamentals of the company.
They're really just trading off of hype and momentum and something that we like to call the greater fool theory. If I buy this stock today for $5, someone else is going to buy it tomorrow for $7, just based purely on momentum, hype, anything but the fundamentals.
There's a reality to meme stocks. Every single quarter, they have to report earnings. When you look at their debt to asset ratio, these things come to the reality of here's the money we made, and by the way, we're not making any money. What happens? All those folks who got emotional about it get hurt. As an investor, you never want to fall in love with an idea. AMC, when you look at what they were pre-pandemic, everybody went to the movies. The company did make money, trading around $20 a share. Then comes the pandemic and the company craters. Why? Because we couldn't go to the movies. Suddenly, here comes the Reddit crowd. And it went from this is a company that's trading in the pennies at one point to skyrocketing up to a couple $100. Here's the problem. Today, earnings per share growth is negative. Margin is negative. The company does not make any money. The herd got it wrong. And if you bought in early, when it was trading at a couple dollars out of the pandemic, and you rode it to 200, good for you. But if you bought it at $199, then you're getting crushed right now.
Another meme stock, some would say the original meme stock, is GameStop. This is a company, of course, in January 2021, shares really took off. Today it's trading closer to 20. And this is even after Roaring Kitty, the Pied Piper of the meme stock craze, broke his silence after 3 years to sort of pump the stock anew. And all of that seemed to give the shares sort of a temporary boost, but we've already seen them give back most of their gains. But really at the end of the day, it's a retail brick and mortar establishment that sells video games. It just seems like it's really going against sort of the dominant trend, which is e-commerce.
A cautionary tale would be Bed Bath & Beyond, a meme stock that at one point ripped significantly higher, only to find out they had too much debt. The debt holders were calling in the debt, meaning they wanted their money back, and they were forced to close operations and sell anything off. When the reality of the revenue wasn't there wasn't a lifeline for Bed Bath & Beyond happened, and the debt holders said, if we want our money back, you're gonna have to sell off all your assets. All those folks who piled in based on a rumor rather than reality got punished.
Another meme stock, sort of a late comer to the trend, is DJT. It's Trump Media. This is the parent company of former President Trump's social media network, Truth Social. So this is a company that has seen huge losses. Most recent quarter, they brought in less than $1 million in revenue. They chalked up losses of about $16 million. And that being said, that hasn't really mattered to investors so far. The biggest influence on DJT's market price recently has been Trump's perceived odds of victory in November. It's just an example of how meme stocks are often completely divorced from things like fundamentals that seem to matter more in the broader stock market universe. Research has shown that penny stocks, meme stocks, any kind of really speculative investment tends not to perform well over time. Broadly speaking, you're better off putting that money in a financially reliable shares of a healthy company that might actually be able to provide a return over a longer period of time.